Hi everyone, this is Devins Financial Weekly Stock Analysis Newsletter. Today is December 6, 2015. Our newsletter is for your informational purpose only. We're not responsible for your gains and losses. Let's take a look at current market trend and our strategy. US stock market uptrend is under pressure. Last week, I reduced long positions and I'm watching for market's next move before either add or exit long position. And let's take a look at the indices and their charts. German DAX index broke 10, 20, 30-day moving average. It's heading toward 50-day moving average. On Friday, this pattern may indicate a fine support, but we have to see what's gonna do next week. NASDAQ Thursday had a big drop with a pretty high volume that triggered market enter the uptrend under pressure phase. But the Friday market rebound, huge rebound percentage-wise, the volume is light for that day. This is not qualified as a follow-through day. So once market enter the under pressure phase, and my action would be reduce the long position, but it's not in a downtrend. Therefore, I did not completely exit the long position. And next week, if the market go above the previous high, that will resume the uptrend. I may add more long position. However, if the market next week melt down and broke 50-day moving average, there's a 200-day, which is a blue line, and 50-day moving average is a yellow line. So if the market broke this key support level, that's a very bearish sign. I would just exit all the long position. Mid cap did the same, find support and 50-day moving average and rebound. We have to watch for market's next move. Small cap, it's all the same. Meltdown on Thursday and Friday just rebound. SP 500 large cap, and Thursday market came down and almost hit the 50-day moving average and then rebound on Friday big time. Gold, this is worth of mentioning. Gold has a reverse of the uptrend, and Friday it went up 2%. That's big for the movement of the gold, and that reversed the downtrend. So gold may have entered a short-term uptrend. Silver did the same and reversed the downtrend. GDX is a gold mining stock, and this has been making a base for a while. On Friday, it broke out from that base. So this is a very bullish for the gold mining ETF, and it may go up for a little while. Previously, it has this kind of rebound, but eventually it all came down because long-term gold is still in the downtrend. This is just on the daily chart, so we may have a short-term bounce. US dollar came down on Thursday. Crude oil still in the downtrend. XLE is an energy ETF, downtrend, broke support, $65, broke 50-day moving average as well. Shanghai Stock Exchange Index, right now it's in the trading range of 3,300 to 3,600. We have to see how it is resolved from this trending range. If it can break above 3,600, that's bullish. Otherwise, if it break down, that would be bearish. So China market is in the trading range. Overall trend, it seems still going up. However, anything can happen, so we just gotta watch for it. ASHS is a China Asia ETF. It does the same as the index. Short term is an uptrend, but this dip is bad. This from $48 suddenly gap down to $44. Fortunately, it's still around the 30-day moving average range, so the trend has not broke, so it's still in the uptrend. CNXT the China Asia ETF as well, the same, it's an uptrend. FXI is 25 large cap stocks that's traded in Hong Kong, and this is FXI is a ETF for American ADRs. This index is going down. It's broke 50-day moving average, so this is in a downtrend. IBB is a biotech ETF. This is not very good. It just came down, hit the 50-day moving average, then bounce up. So overall trend is still going up, but this job is just not very good. IYR is a U.S. real estate ETF. Support at the 50-day moving average. Copper price downtrend, very strong downtrend, but it has a bounce last week, short-term bounce. MBB is the U.S. mortgage bond price. This one last week gap up, but came down. So the interest rate had a wide swing last week. Interest rate is inversely correlated with the bond price. Semiconductor ETF uptrend. Social media ETF still uptrend. Solar ETF bounced back up last week. Has a overall trend is down, but has a bounce, has a rebound. A financial ETF is still in the uptrend. Fortunately, this financial is leading the market most of the time, so we have to watch financial ETF closely. Okay, the last week I reduced my long positions. I sold Amazon, Baidu, Facebook, and the Lowe's. I sold those 4 stocks, and I'm still holding 3 times Nasdaq ETF TECL, but with a reduced position. SPXL, actually I don't hold that anymore. I sold it. And GDX, I bought it, which is a mining stock, a mining ETF. And still hold Google and ServiceNow, and bought Palo Alto Network. And lots of stock on my watch list. The first other stocks are near the buy point: Baidu, LinkedIn, DHI, Monster Beverage, SBNY, Visa, and IMAX. IMAX is a new addition to the IBD leaderboard, so it's on my watch list right now. And those stocks, Amazon, Facebook, and WAL, those 3 stocks are extended. They don't have, they're too far away from the buy point. The buy point is defined as a 5%, within the 5% of the breakout pivotal point. So let's take a look at the charts. First is a closed trade. Amazon, I sold it. Mostly because it closed below 10-day moving average. My stop order is very tight. I sold it with a profit. And this stock I have been sold it and bought back, and sold it and buy back. Amazon had so many breakout. Okay, every gap up is buyable. Gap up and base and breakout and gap up here and pour down, but eventually it gap up again. So this is a recent gap up. That's a buy point. It has a long flat base, and this gap up is usually this is a good breakout. They call breakaway gap, so it's buyable. And now it's in the uptrend. If you still have Amazon stock, you can continue hold on. There's nothing to trigger the sell yet. Baidu is about to break out from this cup base. So this is well, actually it may already break out this 214. Now it may break out the previous high here. So Baidu is in the uptrend, but my stop order is very tight, so I sold it last week. I may buy back. Facebook also triggered my stop, but the stock itself is still in the uptrend. Lows, I have very tight stop order get triggered. I'm out of this stock. But this stock itself is still okay. It had a breakout here. This is a $75.50, 10 cents above the previous high. That is a breakout point. Or you can see this is a cup with a handle. This is a handle which is a $74.67. That's a breakout pivotal point. You can look at that as well. Right now it came down and rebounded again. So this is still in a buy range. Those are the stock I still have, which is a Google. Google is a very strong company, and the stock is performing very well. It break out from this base and gap up and never look back, just continue go up. So I continue hold this stock. ServiceNow is also a very strong stock. It break out here and now in a very strong uptrend. I continue hold. You see, this stock as it go up, it only closed down 10-day moving average in 2 days, but bounce back up. So it just climbed up along the 10-day moving average. That's a strong stock. Palo Alto Networks is a strong company, strong fundamental. And now, and the reason to buy is here. It was consolidating and correcting. It was correcting for things this year, August. So it's been 3-4 months, and then suddenly it came back up and gap up with a huge volume. That's a very bullish sign. With this much volume, it's institutions buying this stock. So that's a reason for us to buy it. Right now, it's still in the uptrend. If you missed a buy, you may consider buy it after it break out from the $200.65, which is 10 cents above previous high. If it can break above that price, this would be a breakout from the double bottom base. So you can buy it there as well. So you can, if you bought it, just hold on. If you haven't bought it, you can wait. Okay, this list is a stock on my watch list, but they're near the buy point. Baidu is near the buy point. It's already broke out from a $214.22. Next stage, it may break out $224. So, but if you bought this stock, you also have to set a stop order in case this stock come down. You gotta get out. DHI is a builder stock. It break out this base, $32, well actually $33.08. Right now it's within the buy point. IMAX is about to break out. Breakout pivotal point is a $39.97. This is a cup with a handle. This is a handle here. LinkedIn also may break out from this is a cup with this little handle, $258.49. That's a breakout pivotal point. It hasn't broke out from that pattern yet. Or you can buy from the gap up previously and using this gap up as a stop order. So, but you haven't made any money yet if you bought it there. Next stage will be buy from breakout from this handle range. Monster Beverage broke out already. Breakout pivotal point is $155.93. I'm sorry, 10 cents above the previous high. $155.93. That's a breakout pivotal point. And right now it's in the buy range. Monster Beverage. SBNY, this is a bank. Breakout pivotal point is right here, 10 cents above $155.94. That's a breakout pivotal point. Right now it's a 5% within that pivotal point, so it's within the buy range. Now, next list of the stocks, those are stocks too extended, no buy point. Amazon, but if you bought it already, continue hold on. And Facebook, and I had it, but I got stop out too quick and may buy them back. WAL uptrend. Breakout pivotal point is $35.27. Obviously, it is too high right now. It's already more than 5%. It's almost 10% of the pivotal point. That's a list of the stocks and my current position size. Google, I have 12%, and 12% of the total fund I use to buy Google. Palo Alto Networks 15%, ServiceNow 14%, and GDX is a gold mining stock ETF is 11%. TECL is a NASDAQ index. I reduced the position last week to 3%. And previously, I communicated with you about the delta value. I will treat long position of the stock delta as 1, and TECL is a leveraged ETF. Delta is 3. So use each stock or ETF's delta value times position size. That's the delta for this particular long position. And those are the delta for each long position. And then add them up. I have 0.61. That's the total delta value for my position. So from here, you can see I have 55% of the fund was used to buy ETF and stock. However, my equivalent long position it's like a 61% because some of the fund was used to buy leverage ETF. So I'm a little bit more than 50% invested. What to do next? And I will stay long, but with a reduced position, like a half or nearly half of the position. I will watch for the market's next move. If the market would go up with a high volume, that would be a follow through. I will add to the long positions. If market would go down with a high volume, that would be further sign of distribution. Distribution is basically institution selling into the market. If that happens, I will exit. I will exit the long position. Just get out. That's all for this week. See you next week.